What's up everyone, it's Scotty with Money Vesting. In this video, we are going to be talking about one stock which is down a little bit over 50% from its all-time highs and continues to slide lower. So whether there is an opportunity in this company or not, and if there is, I'm going to go over exactly the price where I'm going to be looking to start a new position in this company for the long term. So yes, it's not going to be a day trade, swing trade, options, or anything like that. This could be a position for the long term with massive potential as the market reacts to the most recent earnings from this company. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, as well as the private live streams that we're doing Monday, Wednesday, Friday, and the private videos. It's the best time to join. The first week of the month is usually the best time to join, and of course get access to all that. So link's going to be down below. So the company that we are talking about today is going to be none other than Enphase Energy. So you can see that we are down a little bit over 4.8% today, trading as low as $152. And I have had a love and hate relationship with Enphase in the past. I'll go over my story with Enphase here in just a minute. But of course, at one point it was trading at $340, and it's down a little bit over 55% from its all-time highs and continues to slide lower. Now, I actually did a video 2 years ago, back in 2021, talking about how Enphase was a huge opportunity and an energy company with the potential to 2x from those levels. This was back in 2021. I believe might have been like in the first or the second quarter 21. So if you come down to where we were trading at the time, it was roughly at around $120. So this right here was the time when I actually did that video. And you'll notice that it actually ended up trading all the way up to $340, up 180% from those levels. It's incredibly volatile, by the way. This is a very, very wild, volatile stock. It moves like, very, very quickly. So it ended up rallying quite a bit. So this was, again, a video from back in 2021. Huge opportunity for this company. So I was loving the stock back then. But 1 year later, after the stock ended up rallying over hundreds of percent, I did another video talking about be very, very careful with this stock. This is the title, literally. Be very careful with this stock, not touching this. And this was back in August of 2022. So let's just come back to where the price was. I may have been very, very early in kind of calling the top because the valuation was way too high. Although this video actually ended up coming out over here sometime in August of 2022, right? So we're all the way over here somewhere. Right here, August 22. So this right here was when the time the video came out. So we're looking at August 1st. So right around here, August 1st, right there. This was August 1st. This is when the video came out. And, I ended up rallying another 12, 13%. And I ended up looking like a fool in the short term. But that's the point I'm trying to make about valuations, right? And this is something that I think we can all learn and take lessons away from a lot of case studies on Meta, Upstart, Tesla, Enphase. Look at the sentiment, look at the price action, look at the valuation. What is the market really doing versus what you believe to be true with respect to the actual underlying business? And I'd rather be right long term than be right in the short term. Was I getting a lot of, was I looking like a fool back when I did this video? Sure. I mean, it ended up rallying another 12, 13%. But look what's happened since. The market has corrected itself. It's down 49% since that video. And I think a very similar thing is going to happen with NVIDIA. Eventually, it will happen with NVIDIA. It will happen with Microsoft. It will happen with companies that don't trade at their actual true valuation, right? As Warren Buffett puts it really well, in the short term, the stock market's a voting machine. In the long term, it's a weighing machine, right? So it's all going to come down to short term versus long term mindset. And in the short term, prices can swing wildly up and down, and valuations can go crazy both on the upside and on the downside. But over the long term, what's really going to matter is how the company is doing and what's the appropriate price it should be trading at. Because at the end of the day, nobody's going to be willing to overpay for the stock every single day, every single week, every single month. Because, if somebody's buying, they're hoping that the other person's going to pay more for it in the future. But at some point, that insanity is going to stop. And I think we have to understand from a valuation perspective, when is enough enough? So talking about, Enphase again, going back to this, they are a very strong company, no doubt, right? And that's why I've had a love and hate relationship in the first place, right? I loved this company back in 2021 because, again, it's a great company trading at a reasonable valuation. Did not like it in 2022. Why? Because it was a great company trading at the wrong valuation. So I think that's something that we can take away as a lesson, that it's not a hit against the company. It's a hit against the price, the valuation. So this right here is the fundamentals for Enphase. You can see that it's gone from 232 million, right, all the way up to over 2.3 billion dollars, and gross profits also increased substantially. Operating income has also been growing in the last couple of years. This is a quick table kind of summarizing the fundamentals of Enphase, and you can see that it's gone from 233 million to 2.3 billion. It's a 29% growth in revenue. Gross profit, 34.5% CAGR over the last 9 years. Operating income has grown by almost 40%. Net income has grown by a little bit over 13%, but this is also going from 2017, the moment they became profitable, right? So this right here was 2018, right? Operating income became profitable in 2018. Before that, they were generating losses. So this is more from 2018. So the CAGR is definitely a lot higher, closer to 20-25%. EBITDA, 38.5%. Now the share count has been growing at over 14%. However, this is from 2013. From 2017, 2018, it's been a little bit more stable. It's been growing, but more stable at 2 to 3%. So that's what we are going to assume moving forward. I'm not going to plug in 14-15% because, again, we're coming off of a very, very low base from back in 2013. So for the future, for the next 5 years, I'm going to be plugging in, somewhat of a reasonable growth rate for shares outstanding. EPS, again, this is from 2018, and that's also grown by 20-30%, so this CAGR is not actually accurate. And free cash flow also has grown by almost 40%. So overall, the company's been moving in the right direction, right? There's going to be a more and more need for solar microinverters, renewable energy sources. This is where the world is headed, right? So I have no doubt that Enphase is going to be successful. They're posting some very strong numbers. In fact, in the most recent quarter, they also reported year-over-year growth of over 100%. So no problems there. But all we have to really understand is where the valuation, what's the appropriate price at which this company will be a buy. Gross profit at almost 43%. Net margins at over 18%. We got free cash flow margins at 23%. And return on capital is over 17, almost 18%. Return on equity over 75%. And return on assets also pretty decent, over 14.5% for the company. So good margins, good efficiency, good profitability. And the balance sheet's also really good, $1.7 billion of cash with over only $1.3 billion of debt. So they were sitting on a negative net debt of $461 million. So they've got more cash than debt on the balance sheet. Good current ratio, over 3, quick ratio, and current ratio also good. And debt to free cash flow is a little bit less than 4, which is also good for Enphase. Now, talking about the valuation, it has come down, right? So it has definitely come down. If you take a look at the 5-year average that Enphase has been trading at, 78 and 59, and right now it is pretty much 50% lower than what the 5-year average valuation was for Enphase. So again, price is down 55%, so it makes sense why the valuation is also lower, 50 to 60%. Now trading at 29 to 30 times non-GAAP price to earnings basis. GAAP, it's a little bit higher because earnings are lower, 46 to 42. Price to sales, we have come down to now under 9. This is good because at one point it was trading at 16, right? Again, think about that for a second. 16 times sales. Now it's trading at 8 times sales after the sell-off. Now look at NVIDIA. NVIDIA trades at 25 times sales. It's not 5, it's not 8, it's not 10, it's not 15, it's not 20, it's 25 times sales. This right here is going to be priced to cash flow, 24 to 26. And of course, valuations is way too, but in other words, it is a lot lower than where it was just a few months ago. Let's just put it that way. This right here is the EPS expectation. So $5.53 all the way up to as much as $12 in 2028 and all the way up to $15.55 by 2032. So they are expecting growth, right? So analysts are expecting growth from Enphase over the long term. So this right here is going to be the growth rate from $5.53 to $12 to $15.55 all the way over the next 5 to 9 years. And the growth rate, the compounded annual growth rate is going to be 16% to as much as 12% for Enphase in terms of bottom line earnings per share. Now, I've also added a new sort of a row here in our calculator, which is going to be the P multiple. It's going to be more of a rolling P multiple because it's going to help us understand with the share buyback or the share dilution and with the EPS and the price target, what's going to be that appropriate price to earnings multiple that it's trading at at that time in that year into the future. So when it comes to 2023, analysts right now are expecting an EPS of $5.54, right? 5.53, 5.54. That means net income for Enphase is going to somewhere be around $800 million. With the stagnant share count 144 million, that puts us an EPS of $5.54. Now, in terms of future growth, right, what is going to be that long-term growth rate for Enphase over the next 5 years? I'm going to go with a reasonable estimate. I'm not going to go with 16%. Not going to go with 12%. That's more of a 9-year growth rate. I'm going to go with somewhere in the middle. I'm going to go with 14% growth rate for Enphase. Now, discount rate is going to be 12%, 10% margin of safety. I'm going to do 2% share dilution, right? So in other words, they're going to dilute shareholders by 2% per year, increase their share count by 2%. And the P multiple, I'm going to go with 20. I'm not going to go with 40, 50, 30, 25. I'm going to go with 20 to keep that PEG ratio at around 1.2, 1.3. And you'll notice that the fair value now ends up at just a little bit under $100 per share. And I think that's far more appropriate. That's a very, very reasonable number for Enphase for us to take advantage of if and when it actually trades at those levels. Right now it's at 152. So, right now 152.88. So right now we still need another 35% potential downside for Enphase from a more long-term perspective. Now, I did a video a couple days ago talking about when Enphase was selling off from a more swing trade perspective or, an options perspective. But that, again, is going to be off the table considering how significant the momentum has been to the downside. So because of the valuation reset, because of, the stock pretty much coming back to earth here, I think a much better pricing, in my opinion, is going to be closer to $98 to $100. And that's going to be about 18 times P multiple on a forward basis. Very, very reasonable. And then jumping to 19.8, 19.9, 19.9, going to be very consistent at around 20 over the next 5 years, which is where we want it to be, considering a 14% growth rate, and that PEG ratio is going to be 1.4. So that's going to be the analysis. At $100, close to $100, I would be very much interested in Enphase. Of course, preferably a little bit lower because that's going to create a bigger margin of safety and it's going to allow me to buy the stock at an undervalued price. But that's going to be the level that I'm watching. This is going to be the entire technical analysis. We did have a little bit of a rising wedge pattern. Then we saw a breakdown and that continuation even after the earnings. And support level next is going to be $108. So this right here is going to be that level to watch for Enphase moving forward. And of course, we're starting to see a breakdown even further below this level with a resistance all the way up to 229 for Enphase. So this right here is going to be that resistance. We have gotten rejected at that level a couple times, and support all the way down to $108, $109. And I'd be interested to see where the premiums are. Might even sell some cash secured puts at close to $100 strikes. And kind of take a look at that, return collateral for Enphase as well. So let me know your thoughts down in the comment section below. And again, just a very quick lesson to take away from this video, if you can, and that is simply the valuation aspect of it. Short-term prices can swing up and down all over the place wildly, and many people, many investors, and many analysts can be wrong in the short term. But if somebody has an understanding of the long-term value of the business, the underlying company, then chances are over the long term, the market is going to reward them with the fair value that they have assumed to be based on the underlying company. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing. I'll see you all in the next video.